Hey everybody, welcome to Regulatory Joe. I'm Joe Boyle, president of ClearFile, and today I'm pleased to introduce our latest topic, TPA Licensure 101. So starting with the basics, what is a TPA? TPA is short for a third-party administrator, generally speaking, an intermediary between a health plan and a member. And as an intermediary, one of the primary purposes of a TPA is to facilitate transactions and claims between a member getting healthcare services that they need and the payer or the insurer that is going to process and adjudicate those claims. So going back to the basics, so how does a TPA become licensed? Once a TPA identifies an opportunity to work with the payer or work with an insurer, that TPA needs to reach out to the respective division of insurance and obtain the application requirements for not just new licensure, but renewal licensure and any reporting requirements that are associated with that state. There's a few different ways you can do this. You can go directly to a division of insurance website by searching through Google or Bing or any other search engine, and make a few clicks, try to navigate through the web pages using different keywords or other. If you have existing relationships with this payer, the payer themselves may be able to introduce you to the regulators to help better understand those requirements as part of your engagement up front. Once you establish your primary distribution channel, whether it's through your payer, directly to your regulators, or directly to your division of insurance site, we recommend dedicating a resource or a central point of contact to your TPA that can help facilitate the application information to the right legal folks or compliance folks within the organization. Now, licensure does not happen overnight, and it does come with a cost. So we do recommend wrapping around a timeline and a project plan to help disseminate all the application requirements. Generally speaking, a TPA application requires core fundamental things. Here's what you need to know. You need to have, generally speaking, up to 2 years or 1 to 2 years of financial statements. Some states require audited, some do not, so we encourage you to be prepared to obtain audited financial statements if you do not have them already or current within 60 days or 30 days of the effective date of your engagement. That's very important to know because we do know that states and also CPA firms or even audit firms charge quite a bit of money to actually prepare those materials to file with the state. So if you're looking to get licensed on the first of the month and it's the 15th of the preceding month, we recommend baking in a few extra weeks just to making sure you're not overcommitting to your new payer partner and not under-delivering your service to those members by way of those claims. So step number 1, have a very modest timeline. It's easy to be overzealous, so make sure you have the appropriate staff in place to resource the work. Step 2, second to financials, it's really important to have a good understanding of your articles of organization of your business. So really, history about where you're incorporated, where you're domiciled, who your senior officers are, and likely biographical affidavits that come with that. And lastly, with any licensure, there becomes risk. So with risk, really states look for some type of surety bond or E&O coverage, which is short for earnings and omission, to protect them from any risk of operations to a member between them and the payer partner. And depending on the size of your book of business or the size of your payer membership within that geography and within that state, surety bonds could be cost favorable for TPAs, or they could be to the tune of $50,000 to $100,000 a year for membership that can exceed 100,000 members up to 1 million members. Even down to some states such as New York, Florida, or Texas that take a percentage of membership or a percentage of profit, even up to the degree of $1 million surety bond or policy that is required to be covered even to operate and conduct business within those state lines. That is very important to understand up front because if you are a TPA that is hungry to partner with insurance companies, you really need to understand the nature of those insurance companies' footprint, how many members they serve, where they serve, because that could hinder your strategy. If you can't afford to participate in that state, we would never want our TPA partners or administrators to waste work with not doing the right research up front if they don't have the capabilities to actually sustain business within that state. Spend the time, develop a product roadmap, develop an implementation plan, and it's okay. If you have 5 states on your roadmap and you evaluate and need to reprioritize, that's okay. Some states are more affordable to conduct business as a TPA than others. That could change your strategy. Not to say you can't enter all states at the end of the day, but just have a good harness and a good understanding of where your members and where your payers participate. Once you're fully licensed, we've seen new licensure take as early as about 1 week or as long as about 3 months. So really, some states review them as first in, first out, or first come, first serve. We recommend you work with your regulators, but the time spent in new licensure should not hinder you from planning for renewal licensure. As a TPA, if you're a new state entrant, you can get licensed at any point in time across any month in the calendar year. But you need to be mindful about what new licensure means against your renewal application that needs to be completed. New licensure can occur at any point through the year. Renewals generally occur between January and March of every year. For example, if your TPA becomes licensed in the month of November or December, there's a very good chance that that TPA will also need to immediately complete their renewal application starting January, February into March. They will then be superseded into reporting requirements, not allowing that TPA or organization enough time to harness those requirements, understanding the claims that are being produced within their organization, or being able to build a codified, streamlined business process. So while you're working with your states, please be mindful of the deadlines for new licensure as it relates to your renewal applications and incorporate that into your implementation. There's 2 common types of complexities that TPA should be aware of when working hand in glove to get licensed. Really, it's state-by-state variation and missed exceptions for self-funded ERISA requirements. Starting with state-by-state variations, it's really common to see that if you're working with multiple states, while a mandate is a mandate is a mandate, it could be subject to interpretation. So based on your TPA, a mandate could mean something very different for you that it means for a larger TPA, a smaller TPA, ones with more lives or membership, or ones with more profitability or margin. Really having a good understanding of your business through articles of organization will be very important as state regulators and reviewers ask questions. Generally, they ask questions because they're curious, because they need to know more about your business so they can make informed decisions, so that they know you'll be a good steward financially as a fiduciary, serving members, processing their claims to the best of your ability. So making sure that you have a good understanding of your capabilities, you can speak to them eloquently and respond to your regulators on time will be critically important. Second, understanding if you actually qualify for an exemption could be very important. Could be a time saver, a money saver, even speed to market saver. Far too often or not, TPAs that serve self-funded businesses don't realize that they could qualify for an exception, whether you insure or process claims for under 100 lives. A state may be able to waive your application. Or if you have a certain dollar amount of revenue that's under a certain threshold, states have been more apt to waiving your licensure requirements or giving you a little bit more leeway or an abridged application. Fully insured, on the other hand, you'll almost never qualify for an exception given the nature of who you serve and the claims that you process. So if you're new to this work, we definitely recommend investing the time into researching your state requirements. And if it's not clear on the state web pages or by way of publicly available information, we encourage you to pick up the phone and call your regulator. They're always willing to answer and talk to you about all the questions you have. Whether they cede to any recommendations, that's another story, but have the conversation. And now is no better time to talk about building a centralized process into your day-to-day operations within your TPA. The top 3 things we need you looking out for is understanding your footprint and where your organization plays today, understanding your membership and how many lives that you serve, and building a centralized business process and a project management plan for your book of business. So in terms of understanding your footprint and where you play today, so as a TPA working with a payer, really have a good conversation about your payer's strategy if they're looking to grow within their existing market or entering new markets, because that'll be critically important of how you plan your licensure applications. Having that good conversation with your payer will be critically important because we know payer strategies change. So if your payer is proposing to enter a net new market, plan to get licensed in that market, but really set a time-bound deadline to understand there's a go, no-go decision. Are we actually going to go forward with this licensure process or not? Because the last thing you'd want to do is waste valuable time and resources and investment in becoming licensed within the state, only for your payer to change their mind and conduct business operations elsewhere in another geography. Managing your business partners is going to be key, and having a good harness on that strategy for the future. Recommending putting in a short, medium, and long-term strategy to the tune of 6 months, 1 year, or even 2 years ahead of time to really understanding what you're working towards and having that conversation. Step 2. Mapping your services and having a good understanding of your organization and your TPA's capability will be equally as important as step 1. And what we mean by that is understanding who your payers serve based on which segment. We understand payers can file on the federal exchange, off the federal exchange, in the individual market, the small group market, or alternative product offerings. So as your payer is defining their strategy for the next plan year or the next calendar year, ask the questions. So far too often, payers are delegating to TPAs at the 11th hour where they will participate and where claims will need to be processed, but have that conversation up front. And finally, step 3, building a centralized implementation plan and codified business process. Between new licensure, renewal licensure, and everything in between that we just discussed, that's all fine and great. But how are we going to track this work, and how are we actually going to implement it to serve the members that we need to serve? We understand some TPAs currently use programs such as OneNote, Excel, Microsoft Word, sticky notes off the side of their desk, or even homegrown desktop applications, maybe to a degree that you've worked with your analytics team on. ClearFile works really well for our TPA clients today, but we understand different organizations have different capabilities and different needs. We recommend first establishing a work group and identifying key players within your organization with a centralized point of contact for project management, generally a lead that will work with your payer, or a lead that will be, in a way, an account executive to start the partnership for the licensure process. We recommend integrating a member from your compliance or your legal team or general counsel, depending on how your organization's set up, for any senior officer attestations or signatures that are needed on the applications that you're submitting. We also recommend tagging and incorporating somebody from your finance team to have direct access to any of those financial statements we were talking about. So after you're done working through your new licensure applications and your second year renewals, what TPAs will be posed with is establishing reporting requirements. So really getting a good understanding and tapping into your claims and analytics team to get what you need from your internal data warehouse. However it's set up, you're going to build a core business process as you go through your second year of doing business. After you complete your first successful renewal and your first successful set of reporting requirements, you can then set goals. We really recommend sitting down and conducting a lessons learned session by evaluating what went really well and where were there opportunities for improvement with your TPA organization. Is there opportunity for quicker speed to market? Reduced errors or reduced rework by way of objections? Were there things that were submitted that were incorrect or that were questioned by your regulator? If so, why? Don't just take the responses of the questions in stride. We do recommend carving out time to sit down with your team to actually understand root cause and analytics, even for something as administrative as licensure. We do believe that licensure is the backbone of any business operations, and it should be a core part of any TPA's strategy. So really harnessing that, not just your first year or your second year in business, but year over year as your organization grows so that you can remain compliant. And as I mentioned before, don't waste your time waiting for regulators. During your application, before your application process, introduce yourself, have the courtesy call, reach out, break that ground and break that bread with your reviewer. It will only help you open that communication line for a quicker speed to approval and that long-term relationship over time. At the end of the day, it's really important just to have the broad stroke message. Licensure is here to mitigate risk. Every TPA should have this at the forefront of their strategy and have dedicated resources with boots on the ground to support the work. So that being said, thanks everybody for tuning in. Give us a like, give us a share, and we'll see you all next time.